All right, hope everyone's doing well. This is going to be a video over some questions someone asked me. So let's just get started with it. First question is, comparing to, I guess they know I've been in the trading room for a while. I've probably talked about it in a video. And the trading room is Hal's webinar. You can find more of that in brookspriceaction.com. The link's in probably at the bottom of the video. So comparing with 3 years ago, do you feel your chart reading skills have increased dramatically? Absolutely. 100% do. Now, but it's kind of the reality is the more you study, the more you're going to know. The more you trade, the more you're going to know. I have, a lot of what I do, I have OneNote. You can see the icon down here. I will, anything about options, anything I find interesting that Al says, I try and document it. I try and take questions that people ask out at the end of the day, and I try to screenshot them, put them in OneNote, so I have it for later. I will, in the videos, I have taken a screenshot of every single slide in the new video course, and the reason for that is I like to review them, and not only that, sometimes when I'm watching the video, he may say something, and I will actually take notes on those slides. I have watched, and I'm not trying to say, I'm not bragging to say that I've studied out a lot. My whole point is I've been studying Al for a very long time. So rather than me talk about myself, let's just look at this person's questions. About what percentage correct reading real time do I have when I look at charts? I'm not going to go. I will say this. I trade a lot of Forex and the SPY, sometimes Apple. And, the thing is, going to your question 6, if I don't, why not trade the E-mini? Well, E-mini is very expensive. That simple. And you can have a lot more choices with other markets. There's something called micro E-minis that will be released in May, and I'm pretty excited for that. It'll allow people to trade E-mini futures or micro futures of the E-mini contract, and it'll be 1/10 the value. So in other words, one micro contract will be the equivalent of 1/10 of an E-mini. So 1 point would be $5 instead of 50. So, overall with this question is I'm not going to go into position size, profit, or percentage correct reading the market. I'm just not going to do that. But I do feel very confident, and to say the least, that the more I study Al, the better I get. So to whoever's out there, if you are having difficulty, this stuff is a lot easier from, I want to go back further. I don't want to really, I've spent a lot of time looking at this past week. I just don't want to look at it anymore. I'll go over here. Back in the day, I used to, just be mind blown that this rally could just reverse like this, and that this sell-off could reverse up. All of course, but now I've grown to learn what this is. Hey, we get a bull breakout, okay, bad follow through, consecutive bull bars, so, and then more bull bars, but maybe it's a wedge. First push, pullback, second push, pullback, third push. We're breaking above the high of the day, and we're two-legged pullback, but pretty deep. New breakout. So second, right here, second failed breakout of the high of the day. Many bear bars, probably going lower, but strong enough breakout that we're forming, this is probably going to be a trading range. So even if we fall below here, traders will make money probably buying the new low. So, look at this bar, this doji right here. Well, this doji was breaking out below these lows. Let me do it like this. think it's just easier to talk about it in terms of the spot. Excuse me. I've been talking a lot. I think it's easier to look at it in terms of just the E-mini, but it looks the exact same way as the SPY. But either way, here's bar 1. This bar broke below bar 1 at this low, failed to break below, had a second entry buy. You know, even here, okay, I used to think, wow, 4 consecutive bull bars, we're going to get a measured move up. But maybe it's just a failed breakout of this high and a double top or a breakout pullback sell, second entry short. Then I used to say, gee, okay, this has to be a break below the downside. What a great entry bar, this bear bar. Well, not really, because it's a big tail. It's a big gap up, forming a double bottom. Now we're forming a second entry buy. Bears get out. And then look, I gotta sell, gotta buy. And you just get so confused and chewed up where I used to sell this bear breakout bar. Now I'm seeing it as a wedge. The double bottom, failed breakout. So here and here, double bottom, failed breakout. Reasonable buy at the moving average. We're testing this gap. But a warning, couldn't trigger doji, but decent entry bar. Now we're going up, but look at the rally. Where's the consecutive big bull bars? They're not there. Okay, now we're getting stronger, trying to close in a new high of the day. Kind of a micro channel, pretty tight. First reversal down should fail. Reasonable low of the day. And then look. So, breakout with this bar retested. I hate trade stations. This bar retested these lows, tried to form a measuring gap. The second bull breakout. Bad follow through. So you got a question. Maybe this is just a measured move up of the initial range. So at some point, you got to think, okay, maybe parabolic, first push, pullback, second push, pullback, third push, or some sort of second leg trap. 3 pushes up, 1, 2, 3. Very tight channel, so first up should fail. This may be the high of the day. Look what happened, huge bear bar. So anyways, I'm not going to review, I don't want to review charts. But, for me, what I did starting out, I traded, I've taken a lot of trades, a whole lot, probably more than I should. And going back, I watched Al's webinar every day for many, many years. I watched his videos for a long, long time. And I'm still not fully where I want to be. And I don't know if 3 years ago, if I could look back, would I have spent less time trading and more time studying his videos? Maybe. I don't know. All I know is I see trading as kind of you're chipping away at something. And what I mean is you're not going to learn it all in one day or 1 month. You're going to buy this close, stop below here, and go, I can't believe I got stopped out, here. Or you're going to, you're going to sell below this bar, get stopped out, and eventually you're going to buy above here and put your stop below here and get stopped out. And then you're going to start to realize, hey, why is that happening? Eventually you're going to start saying, gee, I don't know if I want to buy bar 2 because there's only in general, maybe a 20-30% chance that bar 2 is the high of the day or the low of the day. So, maybe another thing, then you start to realize that. So you instead of buying above bar 2, you say, gee, I'm going to sell bar 2 because I know there's an 80% chance we're going to fall below the low of the day. However, then you realize the market can go much higher than I think it can. So maybe that's not a good idea. So instead of doing either, I'm going to wait to sell maybe this close or these close, or maybe even sell this close or this close and have a better trade, rather than selling this close and saying, gee, we have to make a measure move down. At some point, you're going to look at it and say, yeah, we probably will get a second leg. Strong enough, we're always in short. However, failed breakout below a trading range, probably going to have to go sideways to up and then retest. So probably going to form a lower trading range, upper trading range, lower trading range. Eventually you say 2 consecutive bear bars, yeah, but still in a tight trading range, probably going to have a deep pullback. Instead of buying this bar above here or buying above here, you say, yeah, it's probably a minor reversal, probably have to form more of a trading range and a better bottom, so I won't buy. The whole point is this. I get why you're asking the question. Everybody's different. If I could go back, I would focus far more on always in trading, stop entries and breakouts. So on a day like today, the only thing you can do, you buy above, put your stop below. You get out of shorts, you get out of longs below this bar. Maybe you sell this close, stop up here. Not really that great. You sell here, sell here, sell here. But 50% pullback. Maybe you get out of shorts or above here. Maybe you go long here. Maybe you buy. Tight channel. Trying to form a measuring gap. Maybe small pullback, bull trend. Maybe you get out here, but pretty tight channel. Probably have to go sideways if you do get out. And maybe you buy again. Maybe above that bar, but really not that great. You get out of short, you get out of long, you get out of longs below here. Maybe you go short, but not great. And then, maybe you buy, or let's go to some random day. Here, gap down. No reason to buy, 20% chance it'll fail. Maybe you go short here, or especially go short here. So strong sell-off, strong enough rally, strong enough sell-off that the first reversal will probably be minor. So if you did get out of shorts, you can hold short and stay short. A scalper may get out of shorts below this bar here, or get out of shorts above here, but they have to get short again below this bar. It's a bear one. No reason to really get out. Fairly tight channel. Less than maybe 30% chance maybe 30% chance this is a wedge bottom. The market's always forming wedge bottoms. And ultimately, we had a large wedge bottom. 1, 2, 3. Clearly always in short. No reason. You can get out of shorts, but again, no real reason to. Maybe bears get out of shorts here. But if they do, probably have to get short again, trying to form a double top. Been going sideways for quite a few bars. Obvious measuring gap. So in the neighborhood of support. And you got to think, best looking bear bars, it's around 11 o'clock. We may go sideways for a while. So, not necessarily a great buy, but, not necessarily a great short either. And eventually, we have broken the trend line, sideways for many bars, maybe 3 pushes up, 1, 2, 3. And then you say, gee, that's a pretty strong trend line break, But as with any trend line break and major trend reversal, most of them fail. So, and they lead to a trading range. Here, 3 pushes up, traders will sell. Strong breakout, strong follow through around the low of the day. It's probably always in short. It is always in short. 60% chance you'll probably go lower. And I know this is the low of the day, but this is kind of hypothetical, if you will. And anyways, over here, 3 pushes down. You can buy bottom of a trading range, but pretty tight channel. So not necessarily that great of a buy. Plus, it's, again, 30% chance that the low of the day is on the first bar. 20% chance maybe. So if you bought above it, you get out of shorts below here. Tight trading range, obvious magnet. Probably will come back to it. So, consecutive bear bars, I wouldn't sell. Again, 3 pushes, 1, 2, 3. If I did sell, you gotta get out shorts above here. And then you start to get a break, a bull bar. And then another bull bar. And by the way, you start to learn eventually that this is a credible buy. And if it's a credible buy, traders will buy it, risk maybe 10 points, scaling more lower. I know this is 10 points, so hypothetically speaking, they risk 10 points. Maybe they risk 20 points on a day like today. Maybe they say, screw it, I'll buy and I'll just risk from here to here going down. So I'll put my stop all the way down here, and notice what happened. And I have a point behind rambling with all this. Look what happened. Traders bought more halfway to their stop. So again, by the way, this happens a lot. Traders buy, scaling lower, scalp out over here. You know, look at this, strong rally. We have to be going up to here. Well, maybe not. It's a 50% pullback from this sell-off, 50% pullback. We broke above these lower highs. Not all that strong. You know, consecutive bull bars here, but big down, big up, big confusion. We only broke below these exhaustive bars, barely, so may just be forming a trading range. And look at that, we went sideways the whole day. So my whole point is this. I learn things every day. I still learn things every day because I still have a lot to learn. So I'm rambling a little bit to prove a point. My point is the amount of times I've tried to study out, and I've had no, the amount of times where I've lost money so long and don't know where to go. The biggest lesson I learned was when you're losing or nothing's really working, you know, everybody goes through it. You take a lot of trades, you do well, and then all of a sudden you just start losing and you can't figure out what's going on. And the reality is because you lack information. So every time that's happened to me, what I learned, well, after so many times that happened, I learned to say, you know, shrug it off and go back to basics and study. Every time I study, I learn something. Every time I look at a chart, I learn something. And if I do that enough times, I get where I want to be. It's that simple. If you study enough, you'll get there. You know, I look at this now and I say, gee, okay, strong rally, gap up, but probably got to get to the moving average. So I don't know if I really want to buy. Plus, it's up. Look at the highs. You know, we're up here, so probably going sideways. And look what happened, sideways. So my advice to you, if you got to enjoy trading. You have to enjoy the process of learning how to trade. If you don't enjoy it, well, maybe reconsider, you know, this quote unquote game, if you will. I like it a lot, so it's fun to me. But you know, with all that said, the more you study, the more you'll get there. If you don't have Al's new video course, well, there's your first problem. You should get it. You know, I've made plenty of videos of why someone should get it, so I'm not going to go into that. Same with the webinar. You got to study. You know, personally, for me, if I could go back, I'd probably spend less time physically trading, and I'd spend maybe twice as much time studying Al's webinars and videos. You know, in the beginning, I probably spent too much time actually trading when I didn't know as much as maybe I should have. But I don't know. You know, I just know every day, if I pick one foot up, so to speak, and put it forward, I'll get to where I want to be. It's really that simple. You know, so right here, 20 bars sideways. In general, 50-50 chance that we'll get some sort of you know, trend resumption, trend reversal. Slightly probably favors the bulls because we had a gap up and we've been rallying, but slightly is maybe, you know, 4% better. You know, maybe it's 55% bulls, 45% bears. But again, it's slight. And look what's going on. Okay, big bear bar, big follow through bar, 2 consecutive bear bars, but possible second leg trap, bottom of a tight trading range, lots of bull bars. So if I was short, I would definitely get out of longs. If I was short, I would get out of shorts, and I consider going long. But again, maybe 50-50 chance you get a small second leg. But it's pretty reasonable to be long. Stop below here. But again, as I said, 50-50 chance. It is, you get a second leg. I would definitely be out of longs. You're starting to get a lot of bear bars, so you kind of got to question. We have a gap here. You know, maybe we're going to get a measured move down of these bars. And look what's going on. You're selling off. Maybe you're testing yesterday's close. So, parabolic, 1, 2, 3. 3 pushes down, but very tight channel. First up might fail. I wouldn't buy. but I'd be open to the possibility of some sort of 50% pullback and a rally. And I think this is a leg in a trading range. So as strong as this is, I still think this is minor compared to this sell-off. And look what happened. That's not good. We're quickly reversing this, so you have to be open to a double top measure move down. And it might be, we're still getting gaps. So I don't want to buy after that, too many bear bars. Look what happened. Voila, double top bear flag, measured move down. Very tight channel, kind of an endless pullback. Do I buy here? Well, you can, but still, again, it's pretty tight and probably going to form a trading range. There's the whole day. Finally we popped back up to the end of the day, and on the very next day we went sideways for a lot of bars, formed an even larger trading range. Maybe it's a bear channel. Not that you need to really draw these lines, but we'll draw them just for the sake of it. Look at that. So you always got to be open to a few things. Whenever you see here's a wedge, 1, 2, 3. Whenever you see a rally that doesn't get above a major high up here, then you got to be open. Trend line break, retest. Just as this happened. So we had this, twice. Here, we had a sell-off, kind of a strong rally. You have to be open to a measure move down. We had a sell-off, strong rally. Look at all those bull bars, but we failed to break above these highs. It could very well be a double top and measure move down, which it was. Don't buy above that, too many bear bars. Wait for a second entry. Don't buy that, too many bear bars. Not a great second entry, and it didn't trigger. Don't buy that, moving average, but it's tight channel breakout on a higher time frame. Probably got to go sideways for many bars. Look what happened after this sell-off. We had to go sideways for like 30 bars. Breakout, bear breakout follow through. Probably wouldn't sell it because we're probably going to go up to here. So now I'm thinking, gee, okay, we're probably going to go up to here before we go measure move down. But 50-50 chance you get a second leg, but it's probably exhaustion. There's our second leg, trying to form a bottom, and look what happened. We finally made it. So anyways, that's all the time I have. I hope this helps, but that's my point, guys. You got to study. If you don't know where to start, grab Al's video course. If you have Al's video course and you don't know where to start, maybe get in Al's webinar, get in his trading room, and just focus on learning. You can, the more you know, the better you're going to be. If you know what you're doing, if you understand Al's information, you're going to be fine. If you don't understand Al's information, you probably, and I'm assuming, Al's the only person I study when it comes to trading. It's just because it's easy for me. I find Al very credible, so that's good enough for me. So you gotta study. You gotta study. No one's gonna do it for you. You gotta take responsibility. And yeah, I see a lot of comments of people saying, "Oh, gee, Al's saying this and this and this, blah blah blah." He's contradicting. Well, I used to feel the same way until I started learning more, and then I started saying, gee, okay, now I get what Al means. It's confusing. Is this going to be ignore this exhaustion, what we just talked about, but hey, there's a real chance this could be a double top measure move down. So, here, double top, real chance we could get a measure move, but tight channel probably won't. But look what happened. Close the gap. Probably going to close this gap. But you got to be wondering, the bears are awfully trying hard to close it. They may fail. And they didn't. Well, I spoke too soon. Try it again. Probably going to get a measure move up. Whenever you get a surprise bar, the market likes to test the breakout point. Breakout point, try to test it here, try to test it here, try to test it here, try to test it here. So you got a question, is this a reversal or is this a breakout, a retest of the pullback or the breakout point? A retest of the breakout point, which it was. And then, trying to test again, got the measure move up. So you always got to question that. Big doji, traders will sell above it, kind of an endless pullback. very strong sell-off. Could be a 50% pullback of this rally, but no way am I going to buy after this many bear bars. Okay, I'd probably get out of shorts. It's an okay buy, but again, not great. If I buy that, I need to see a lot of follow through really quickly, and kind of disappointing. But it's okay follow through, but it's confusing. May just be a 50% pullback. Definitely trying to retest, but I think we're going to turn down. But 50% pullback, so you don't want to sell yet. Tight channel, just as this was tight, this is tight. And, we may get another, we have a measuring gap, potential measuring gap. And look, we broke out to the upside. So as strong as this sell-off was, it was just a channel. So draw one thing for you. And I do this all the time. I just I look at a chart, and I just start picking random places and just drawing stuff and just saying, okay, and just going through it. Hey, broke above the channel. Well, I know, okay, we're breaking above a channel. That means the odds favor 75% chance we're going to test the bottom. And we didn't. So, but again, look what's happening. We have measuring gap. So, what we don't know is maybe there's just a measuring gap right here, which turned out to be certainly. Maybe it's a measuring gap up here, which I don't know if that one did it. It actually might have been, and it was. So, I hope this is helpful. You just got to study. The more you study, the better you're going to do. Don't risk more than 3% total on any given trade. Al says it all the time. But study and you'll get there. Thanks for watching.